If you want to be as tax efficient as possible, then I strongly believe you have to have a pre-year-end tax meeting. It helps you with planning in advance, make sure things are done on time, every time, and it also helps you to pay your tax on time. But I've got my 6 top reasons why you should have a tax meeting. Watch the video to find out. So the first one is deadlines. This is deadlines for when you give your records to your accountant, deadlines in terms of when they'll complete the accounts after the year end, and I think if you have a limited company, it should be 3 or 4 months after your year end, the latest. Earlier the better, because that gives you more time to pay your tax. And of course, talking about deadlines, looking at when you need to pay your tax by, so you've got a clear mindset and a clear time frame of how much money you need to save if you haven't got the funds in your bank account. So deadlines are extremely important. If you have a business, you'll know by now you can't plan for tax after the event. So the pre-year-end tax meeting is a fantastic opportunity for you to sit with your accountant or tax advisor to look at how much tax you have to pay based on your performance so far. So a pre-year-end meeting usually happens around month 10, possibly month 11 within your year end. So you've got another 1 or 2 months to go for your accounting year to finish. You look at the performance, work out what the tax is going to be and the profits are going to be for a 12-month period, so you know how much tax to pay. Then you have a conversation on, okay, what things can we do from now up until the end of the year to reduce our tax. So just to give you 2 or 3 very quick examples. One could be maybe you need to buy some equipment, and buying it now and claiming capital allowances on it is going to help you reduce your tax. Secondly, possibly paying pension contributions and reducing your tax liability. Third, for example, looking at maybe paying yourself a bonus and reducing your profits. Again, things that you need to be looking at in detail, but there's a whole list of things that your accountant will have, which they'll tick through and make sure that you are as tax efficient as possible. The third one is remuneration planning, because you're in business, you obviously want to get paid and you want to make sure your business can pay you. So looking at your income tax position, looking at when to take dividends, how to time them so that you are as tax efficient as possible. Alongside that, reviewing if you're on PAYE, your salary, and also looking at whether you can pay yourself a bonus. So all of that will be covered in your pre-year-end tax meeting, so you can see how important it is, because that's going to help you not only look at your corporation tax if you have a limited company, but also your income tax, and if you have a sole trader, partnership or an LLP, again looking at your overall income tax exposure. The fourth one is the future. So your accountant will sit with you and look at, okay, how are we going to plan for next year? What's going to happen? Are there any changes? Do you need more staff, employees, turnover, costs? All of that analysis can be done at the pre-year-end meeting, which sets you up nicely. So once you've got the accounts ready and you do your post-year-end meeting, you've had a conversation around the future, you'll have thought about it more, and then you can discuss that in more detail and look at some cash flows, budgets and projections, so you can go into the next year in a much better way. Number 5, looking at different reliefs. So this is a good opportunity to look at all the different reliefs, allowances, exemptions, and see which ones apply to your business. A real obvious one is R&D tax credits. So if that applies to your business, the accountant can look at that for you, help you file a claim. But there are many different allowances. Maybe you're thinking of selling your business, or looking at, do you qualify for entrepreneurs relief? If not, what needs to happen for you to qualify? So this is a good time to look at all of those different reliefs and make sure you're maximizing all of them, because they're all within the tax rules. Number 6, looking at and considering how your accounts will be viewed by external parties. So this is your mortgage company, this could be your credit rating, it could be your bank, if you're looking at financing, funding, cash flow. So looking at how they're going to view your accounts and what kind of an impact that's going to have on your ability to either renew current commitments or to get additional commitments. So a pre-year meeting will enable you to do that, and then you can plan accordingly to make sure that you satisfy the bank and third parties, and hopefully also improve your credit rating.